Good morning. This is Tom Aspray with the Viper Report. It's Friday morning, about 10 a.m. Eastern Time. Market has just opened. I want to give you a quick update before you review last week's technical market review. You can see this is a chart of the SPY. Had a pretty, rough week. Dropped down to a low of, I think, just above 380. Held above the S1 and the December low, which I think is still a possible downside target initially. The rally yesterday was very impressive, $30 billion to help out First Republic. Look where it failed. The high here was right at the 20-week exponential moving average in red. Okay, AD lines still look pretty lousy, and volume, of course, on this decline has been heavy. So far this morning, we're not doing great. As I said, this is updated prices, so the S&P is down a little bit. NASDAQ's up. Dow was down a couple hundred points just 20 minutes ago. Now it's only down 144. AD numbers here, are looking negative. Sure, no signs of a turnaround in the AD lines. You can see the S&P 500 is the weakest. NASDAQ, the NYSE all need to move through these downtrends to turn positive. That does not likely in the near future. As I indicated last week, there was no signs that the selling in the bank stock was going to abide. You can see we had a pretty big move down in the KRE. That's the regional bank index. Got down to 41.42, made it up to 47.51, and now is down 3.5% in early Friday trading. Of course, FRC, First Republic Bank, is even worse. It closed last Friday at 81.76, hit a low of 17.53 early in the week, rebounded yesterday to a high, I guess, of 40, and now it's back to $29, a little under 30. So a week from today, on March 24th, I'll be giving a presentation. I'll discuss the markets, some of the techniques I use to help avoid risk, as well as the outlook after the surprising banking problems. There's a link in the email. Hope you'll sign up. I'm giving a presentation at 10 o'clock on Friday, and it'll. I think you'll find it informative and beneficial, especially in these sort of troubled times. They have a good list of other speakers, some old friends, Dan Passarelli, Tony Herman, and the Mansas. So should be a good presentation. I hope you'll support me and sign up. And now on to the weekend video. Of course, I will be doing a full market review after today's close. This is Tom Aspray with the Viper Report, market wrap video for the week ending March 10th, or the week of SVB, as it probably will be known in the future. The surprising collapse of this financing institution for Silicon Valley really roiled the markets. This chart of the KRE, that's the SPDR S&P Regional Bank Index, pretty much shows what happened. The close on Wednesday was below the S2. The volume was not that heavy, but then by Thursday and of course Friday, things really hit the skids as there was wholesale dumping of stocks across all sectors. This is likely to be a long story, as whoever thought it was a good idea to invest your depositors' cash supposedly in the bond market and then not do anything as rates skyrocket. Well, needless to say, there was considerable technical damage with about 6-to-1 negative weekly advanced decline numbers. This chart of the Spider Trust shows you the reversal here. Last week's close, it looked pretty promising. Oftentimes, you retest the former downtrend, that was resistance, now becomes support. Did not matter. Next level I'm watching is the 274.77 area, but that's after a bounce. That's the December low. You can see the S&P 500 AD line. It bounced off its EMA a week ago and collapsed this week. Similar action in the stocks only that have also broken their uptrend below their EMA and the all AD line is holding up a bit better, but still, this becomes the major barrier to watch in the weeks ahead. The selling was very heavy. This shows you that last several days last week, Tuesday, Thursday, and Friday, there were 85 to 90% of the S&P stocks were lower. Similar down here for the Qs, about 94% I think on Thursday, 70% on Friday. The NYSE Advanced Minus Decline Oscillator closed at minus 1372. It was the last couple lows were below 1800, both at the end of September and in June, which were part of the bottoming process. So, likely scenario is we'll get a bounce here, and unless something changes dramatically, it'll probably fail around this minus 300 to zero level, and then we'll get another push to the downside. Number of stocks above the 10-day moving average on the Qs closed at 4%. You can see that's in an area where, if nothing else, you'll get a bounce. Last couple times it was there. We did get a couple of days, at least sideways activity here. Back in here, we got one of the rallies in September. It was a pretty sharp one. So something similar. 20-day EMA is at 296.57. So that should limit the upside, I would think. Looking at the weekly chart of the Spider Trust, you can better see that reversal and the downside break in the S&P 500 AD line on a weekly basis. So now this becomes the key level of support. QQQ is not down as much as the other averages, but still looks pretty weak. Don't like this pattern in the weekly AD line, in a clear downtrend here. RS still is a sign that the QQQ is not going to decline as much as in the S&P, which is quite interesting. IWM got smacked. You can see that this got hit really hard. I think it was down 8%. AD line weekly flipped back to negative, and the OBV also closed negative. Some of the markets have been pressuring stocks over the past month or so, where both interest rates and the dollar, you can see that we had quite the move lower in the 10-year Treasury note on a two-day basis, plunged below the Stark band. So that suggests we probably will see a rebound here, but the MACDs do look as though the yields have topped here. Similar action in the two-year note yield also got crashed, 45 basis points in 2 days. Article in Bloomberg indicated that Bespoke Investment had found 79 similar instances since 1950. All but 2 were indicative of recession, either currently or in 6 months. I am not in that camp, and another one of the positives is the dollar turned lower. So this is the Euro futures, had a nice move up. That corresponded with a nice rally in gold. OBV is positive. HPI has broken its downtrend here. So, a weaker dollar and lower yields should be a plus for the stock market. We'll give it a little less competition, but the volatility in all those markets is still extremely high. The dollar is not as clear in the dollar index here. We formed a doji and we're lower, but closed at 104.62, so a drop below 104 should get the things rolling. And you can see the HPI is barely positive at like +2. Not a very impressive reading. So next week's action will also be important there. Gold appears to have completed its correction. The OBV flipped back to positive. That's normally a good sign. The HPI is below its moving average, but above the zero line at plus 2,600 roughly. So that's good. You can see that 1846, which is the 20-week EMA, it's about $20 below current levels. That's a good level of support if we get some consolidation next week. It was another crazy week in the futures. We covered our shorts about 2 weeks ago here. We got this flip on, I guess it was the 3rd of March, a week ago Friday. Chopped around, reversed back to the short side. hit the first downside target here. So stochastic confirmer is negative, but you could make a case for a positive divergence here. It's well above the last low, so look for a rally around up to 39.58. On the upside is going to be a tough level of resistance. We closed at so that's about 45 points above current levels. If you look at the 260 analysis, you can see the next week pivot is at 39.35, and so that's also a barrier here. Stochastic confirmer is positive at oversold levels. Volume, turned right in here. I hope to put out together a little video on follow-up on the stochastic confirmer in the next week. Well, that's pretty much all I have today, but I'll keep you posted during the week. And I think probably the reaction of the financial market is going to be what the various governments, I know comments from Singapore and the UK, do to support some of the depositors in the next couple of days will probably, if they do it, will decrease the contagion fears. So hang on to your seats in the week ahead, and I'll keep in touch. Thank you.